Let's talk about some of these earnings itself. Arvind Fashions reported a good set of first quarter numbers. The revenue and margin came in healthy. The company expects growth acceleration to continue as well to compare with FY24 levels itself. So to discuss more of this, we have with us Kulin Lalbhai, who's the VC and non-executive director, joining in. Thanks a lot, Kulin, for joining in. Congratulations. It was a good set. In a tough quarter, 10% revenue growth, no mean feat out there, with improvement in EBITDA margins too. The question then that begets asking is that once the tough period is over, ahead of the festive season and right as the monsoons are pretty good, etc. as well, what are you gunning for the entire year? I mean, your typical guidance is 10 to 15%. Do you think it'll be more 15 than 10 for the full year?
I think it's still a little difficult to give midterm guidances. I think what we are happy about is that a lot of our growth drivers are now kicking in. So one of the growth drivers for the company is net square footage addition. And this quarter, we were able to add almost 50,000 net square feet of retail space. And we believe that we have a very healthy expansion pipeline this year as we're going to open more than 150 stores. That will definitely help in growth. We also have certain new categories which are growing very well. Our footwear business, our innerwear business, and our women's wear business are all three of them are growing extremely well. So I think those are also gaining momentum. And as you very rightly said, I think the first quarter was subdued because we had very few marriages. I think the whole consumption of apparel got impacted. And we do believe that quarter three, quarter four, where a lot of the marriages this year are concentrated, it will definitely help perk up demand.
Okay. Kulin, hi, welcome to the show. So for Q2 and Q3 then, can you better the growth that you've seen in this quarter, which was a revenue growth of around 10-odd%, EBITDA growth of around 23-odd%, margins of 12%? Give us a sense in terms of what we can expect when it comes to numbers in Q2 and Q3.
I think currently we should expect a revenue run rate which is similar, and we do expect as we exit the year it should accelerate. But from a very short-term perspective, I think a revenue print close to where we are today, and we are guiding 100-ish basis point improvement year on year in our EBITDA margin. So versus last year's Q2. That's the sort of guidance as our operating leverage kicks in. And we've also seen our gross margin constantly improve because we are focused on full price sell-throughs and productivity. So because of those advantages, we are expecting 100 basis points improvement year on year in our EBITDA margins.
All right, Kulin, we'll talk about your business at large in just a bit. But since we have you with us, we'll speak through you for the industry as well. Yesterday, we saw a lot of these garment makers see their stock prices being bid up largely in hopes of business coming to them on account of the uncertainty that's there in Bangladesh. So what was China plus one, say, a year ago for a lot of the electronic products, etc., and manufacturing, may now for the textile industry turn out to be Bangladesh plus one. How do you see this as a possibility? And do you think we're ready for that? If yes, what's the kind of opportunity that comes about?
I think, in the short term to expect very, very large changes is not very likely. But I think in a medium term perspective, this definitely positions India as a much more stable, predictable sourcing destination. And I think that is good for the country. I think our main focus should be how we can make our garment exports move from its 15-16 billion where it is stuck since a while. And how do we double it to 30 billion? I mean, Bangladesh, just to give you a number, is close to $50 billion on garment exports. So India is, as a full country, 1/3 of what Bangladesh exports. So the opportunity is very big. As you rightly said, we'll have to execute on putting together the capacities and having an efficient sort of at-scale garment manufacturing. But I think long-term, India is emerging as a serious destination for garments. Everyone realizes that this is a country which has a lot of strategic depth. We have a lot of labor pool available. And of course, we have political stability, which will help the country in the medium to long term.
Okay, well, but Kulin, just wanted to understand about the capacity bit. Is it a near-term opportunity for India? Do you think that there would be an immediate shift to India simply because of the uncertainties in Bangladesh, or is it going to be something which is probably going to be more stretched out and long-term?
There could be some tactical kind of movements for goods which are very urgently required, but typically the way the ordering cycle works in the apparel industry is that there is a good 6 to 8 month effort that a brand puts in to kind of set up a certain set of product categories with certain factories. So I think this has to play out more, as I mentioned, from a medium-term perspective. And there could be some tactical orders that move around for goods which are fungible or easier to move around, but it cannot be a very large quantum.
All right. How much do you source from Bangladesh, if at all, or your entire production is domestic?
So for Arvind Fashions, we are a very India, focused, sourcing strategy. So I mean, we would have a non-India component of anywhere between 10 to 15%. So it's not very large for us. We largely source out of India.
Okay, you largely source out of India. Just wanted to quickly touch upon your expansion plans in terms of store additions, and if you could give us a sense in terms of what you are looking at when it comes to your balance sheet as well, say in terms of debt as well as deleveraging plans.
Yeah, so, on expansion, as I mentioned, we will be opening more than 150 stores this year. Then another thing we are seeing is that more experiential, larger footprint stores are doing extremely well. So in the case of US Polo, we are now opening stores in the big metros, which are more than 3,000 square feet, where we can give the entire lifestyle with all categories. So whilst we are opening 150 stores, our average square foot per store has also gone up this year. So as I mentioned, this year we should be expanding our retail footprint by 15%. A net square foot addition of 15% on our base. So it's a year where we do see good amount of expansion that will be coming in. On the balance sheet, we are generating free cash flow now. So whatever free cash flows are being generated are leading to a reduction in debt. I think at an annual level, you will see debt levels marginally go down. They'll be going down by around 50 crores. So we'll be generating the cash and reducing leverage.
All right. Final question just before we let you go. You did speak about a couple of your emerging categories doing extremely well. I see 4 of them. There's footwear, innerwear, women's wear, and kids wear. How much do they account for in your overall mix right now? Or at what rate are they likely to grow going forward? At least 2.5x of your average?
That's right. We are around 20% of the company revenue now comes from these new emerging categories, and they are growing at 2 times the rate as the core business. So it is one of the good growth drivers. And we're excited with the opportunity. We're seeing that in a lot of these categories, the casualization trend is really catching on like it did in apparel. We are a casual wear portfolio. We're very strong in casual. And I'd say, for example, in footwear, as the business pivots to fashion sneakers, it's helping us a lot with our brand portfolio. So I think because of those tailwinds, we expect to gain market share in some of these emerging categories.
Okay, all right, Kulin, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Arvind Fashions. That stock is doing well. It's up around 2% at this point in time. Well, for the markets holding up steadily, so we'll take a short break. On the other side, we'll focus on a lot of these buzzing stocks which are dominating news today. Stay tuned.